Big deal in making, that is Cipla's promoter stake sale, which has been in the news for quite some time now.
Blackstone is looking to buy this Indian pharma company.
We hope Cipla retains its identity with an Indian company buyout.
Cipla stock is at an all-time high.
We are picking up now that Torrent Pharmaceuticals may be setting its eyes on Cipla.
Cipla may have set the stage, but the spotlight clearly now on Torrent, the surprise entrant reportedly making a play for the drug major. With an estimated check size of $7 billion, this could potentially be the largest pharma deal India has ever seen, where one of the quietest pharma founders, the Mehtas, are looking to buy out Cipla, a company whose revenues are double of Torrent Pharma. It's also interesting and almost ironical to note that Cipla, which has failed to find a third generation of promoters in the Hamids, is facing a possible buyer from the Mehtas, who are reinvigorating the business with the third generation stepping in. The story of Cipla is well known, and if you've missed it, head across to one of our older podcasts. But the story of the Torrent stalwarts, Sudhir and Sameer Mehta, remain elusive. Very little is known about the group and the family, which has big ambitions in big pharma, power, and possibly even finance. The tale and ambitions of a tight-lipped but turbo Torrent are now constantly front page. But is Cipla a good fit for Torrent?
I'll just tell you this, that India's 10th largest pharma company by revenues is probably making an attempt to buy the 4th largest one.
And how feasible is the financing?
The stock has already gone up 20% in 1 month. Then if the entire open offer is successful, then we are going to see a 60,000 crore check. 60,000 crore vis-a-vis 3,600 crores. That's the difference in scale, which is why it was mind-boggling to assume.
Is it just balance sheet or a lot more that will pose to be a challenge for integration? From financing to the finish line, what is next in this fast developing story? It's September 5th. I'm your host Anupriya Nair, and with me will be ET's Arijit Burman, Kiran Somvanshi and Sangeeta Mehta as we take you behind the scenes of the turbo and tight-lipped Torrent as it packs a punch and aims for Cipla. Stay tuned to the Morning Brief. Ahmedabad, which is home to many of India's billionaires, aptly has a street called the Billionaire Street, which plays a host to quite a few of them. The list of the lane at the post office reads off almost like a rich list of India, with residents such as Gautam Adani, Pankaj Patel of Zydus Cadila, the Nirma founder Karsan Bhai Patel, and even the Shahs of AI engineering. Nestled among these is the Mehta family, the two Torrent Group brothers, Sudhir and Sameer. Much like their Gujarati entrepreneur counterparts, very little is known about the family, which has a combined net worth of over 50,000 crores and runs the 63-year-old Gujarat-based Torrent Group. The family had a modest start when Sudhir and Sameer Mehta's father, Uttam Bhai Nathlal Mehta, the patriarch of the family, kicked off his career as a mere medical representative with Swedish firm Sandoz. That was back in the 1940s. It was only in 1959 that the Mehta family would step into pharma, with UN Mehta setting up Trinity Labs with just 25,000 rupees in capital. But M&A was in the Mehta genes. UN Mehta soon took under his fold a company founded by Rajnikant C. Patel in 1971. That firm was Torrent. From there, Torrent was on a turbo run, with a big milestone being reached in 1983, with the company getting their first export order to the erstwhile USSR. The two brothers, Sudhir and Sameer, also took over, and by 1990, the group had also diversified into power, followed by gas, and then a lot more. In 2014, the brothers divided the businesses on paper as the third generation geared to be active. Elder brother Sudhir, who had been chairman of the pharma company up till now, stepped down to put his focus on the power business, with his sons Varun and Jinal taking on managerial and directorship positions. The younger brother Sameer, who had been instrumental in the city gas distribution business, took on pharma with his son Aman, playing a key role especially in the big push towards M&A. And in that, Torrent has been on a tear. In fact, if you search acquisitions and milestones listed on the Torrent website, over 10 hits show up in the pharma section. And the journey of the buyout started as early as a decade ago. To dive a little deeper into Torrent's ambition, their big moves in M&A, and how feasible really pharma is, let's get into this conversation. Economics Times deal whisperer Arijit Burman, as well as our in-house pharma expert Kiran Somvanshi. First, let me hop across to TMB co-host Kiran Somvanshi as he puts on the hat of a guest today. Kiran, take us through the ambitious M&A route that Torrent has taken. Cipla is next in line potentially, but this is not a new run for them.
So Torrent has been acquisitive in nature. Like I can say that Torrent is aggressive, and we can see the similarities between Torrent. Like Torrent, I can call that Torrent is nothing but a smaller Sun Pharma right now, in terms of the way they are poising itself and in terms of how they are acquisitive. So when you look at Torrent Pharma and how it has grown to become, the 10th largest pharma company by revenues, we have to go in its history. And it started its acquisition actually from international markets way back in 2005, when it acquired the 90 years old Human Pharma from Pfizer to basically enter the German market. And after that, they made some few small acquisitions in the US market. And in India, they made a series of mid and small size acquisitions. And the first of it was Elder Pharma, which you referred to way back in 2013, so 10 years back. And after that, they acquired derma business of Zig Pharma in 2015. Then they also acquired Unichem's Indian branded business along with its Sikkim plant in 2017. And its latest acquisition last year was Curatio, a cosmetic dermatology company. So they have been acquisitive. They have kind of built on their business through organic as well as inorganic growth both.
In fact, let's listen in to Aman Mehta, son of Sameer Mehta, who took over as a director of Torrent Pharma last year and made it aptly clear to analysts at a recent con call that M&A was the way to go.
I would say the acquisition themes would remain similar in the sense that it will predominantly be focused on Indian branded businesses, either in existing therapies or new therapies. That depends on the quality of the asset and the strategic fit. But definitely still remains an important priority for us. Curatio being the example of how we enter into a new segment through the inorganic route. That's the preferred option.
Let's head across to Economic Times deal whisperer Arijit Burman, who broke the story that Torrent was in fact looking at Cipla. The opportunity in inorganic growth now presenting itself to be bigger than ever before, with the 33% of the Hamid promoter stake for Cipla on the block potentially. Arijit, what are your sources telling you?
Yes, and that is something that honestly, I don't think too many people expected in the beginning, simply because of the scale and size. We are looking at a company that is double in terms of revenue. So in this day and age, when cheap money is over, for someone to dare to take such a bold step, one had assumed that it would be private equity because they've raised so much of money, and that too some of the biggest names, Blackstone and Barings, both very aggressive on India, very bullish on India. Both, in fact, did put in a binding bid in early August. Both definitely in fray. But then out of the blue comes this news of Torrent. And as I said, not just the size, but also Torrent's history vis-a-vis acquisitions. The largest check they've ever written, that is Torrent has ever written, to acquire a company or brands is that of Unichem. Again, a succession issue story, but that was just 4,000 crores. Here we are talking about, actually, depending on the success of the open offer, anything from $5 to $7 billion. So that's the scale which we're talking about. If it's $7 billion, assuming we take the current market price of Cipla, the stock has already gone up 20% in 1 month. Then if the entire open offer is successful, then we are going to see a 60,000 crore check. 60,000 crore vis-a-vis 3,600 crores. That's the difference in scale, which is why it was mind-boggling to assume. You would have noticed that Torrent has become more aggressive, more acquisitive, But this, most people assumed, was way out of their league, and that is why the wow factor.
Is it way out of their league? Let's bring in Kiran to understand that a little bit more. Kiran, take us through the scope and the scale that we're talking about between these two companies.
So to start off, I'll just kind of define it, so to say. The Torrent Pharma, with an annual revenue of around 9,600 crores, is the flagship company of this Torrent group. The group revenue stands at 37,000 odd crores. If I have to compare it with Cipla, size wise and everything, I'll just tell you this, that India's 10th largest pharma company by revenues is probably making an attempt to buy the fourth largest one. So that should give you the size that we are talking about. So for financial year 2023, Cipla had a revenue of 22,500 crore rupees and a net profit of around 3,000 odd crore rupees. In comparison, Torrent Pharma had revenues of like 9,400 crores and a profit of 1,200 crore rupees. So you can see that company is trying to acquire another large company, much larger company, which is 2.5 times the size of itself. So that kind of is quite remarkable. Of course, it's not that it's unprecedented in Indian pharma, because we saw Sun Pharma buying Ranbaxy, but they were kind of equal. First time we have a much smaller company in terms of size, in terms of market cap, in terms of market share in the Indian pharma market, eyeing to bite much bigger company.
Arijit, after the story broke and there was a concern on the Torrent stock as well and weighed the stock down, the exchanges in fact sought a reply from the company. Torrent Pharma well placed a fairly covertly worded piece to the exchanges. It read, and I quote, "The company has noted that the news item refers to a potential sale of shares by its promoters pertaining to their involvement in the acquisition of Cipla shares. As policy, the company does not comment on speculative reports in the absence of verified data." Arijit, what are you reading into this, what I may call a lack of denial?
Well, unexpected lines, because they've submitted a non-binding bid. What they've told the exchanges is that they assume, their lawyers, their interpretation is they don't need to disclose anything. Well, we've seen there have been innumerable cases where such disclosures, I would call them vanilla disclosures, which says it's neither here nor there. They just informed the exchanges that we'll update you at the right time. The right time will be, logically, because these are both listed companies, is when you make a binding offer. That's when, ideally, one should make a disclosure. Had it been in America, you had to make a disclosure, or else you would have had to face penalties. But in India, we've seen there are gray areas. So I'm not reading much into it, because I do know that they are definitely lining up financing, because that's going to be the major challenge, as I said.
Yeah. It's not a small check, and it's definitely not in anybody's back pocket at this point. And despite the fact that it's not a debt heavy company, it's got a very high promoter shareholding as well. So they do have the ability to take on leverage. What are you hearing on the funding side? Is there going to be some piece participating? Like, where is the money really going to come from for Torrent? Because the balance sheet looks strong, but strong enough for a buyout as big as Cipla.
See, depends on your level of aggression. If we look at their debt equity, it's less than 1. So therefore, there is enough scope to leverage. The stock historically also has quoted at a forward P multiple of around 28 to 30 times a forward multiple, and consistently ranked among the top 5 most valued companies in Indian pharma, especially in the last 5 years. And as you said, high promoter shareholding, 70+%, highest actually among all Indian promoters in the pharma sector, which gives them the flexibility to dilute equity, raise debt. So what they're doing is trying to raise funds at multiple levels. Yes, they are in dialogue with several bulge bracket private equity to raise at least $1 billion. They've reached out to people like CVC Capital, Warburg Pincus, Bain Capital to join in and form a consortium. So that's around 8,300 odd crores, or $1 billion. In addition, they are also in talks with domestic institutions, Indian shadow banks, mutual funds, insurance companies, for promoter financing. That's where the high promoter shareholding will come into play. they will pledge their shares. Their stake is, as I said, 71 odd percent. They're going to pledge a large part of that and raise another $1 billion. So 9,000 to 10,000 odd crores is what they're looking to raise through share back promoter financing. Parallelly, they are looking for acquisition financing. That's where it's almost like a leverage buyout. You lever up the target. So based on Cipla's balance sheet, you raise debt. Cipla's future cash flow projections, you raise debt. And that's the big one. They're looking to raise around $4 billion. That's around 32 to 35,000 odd crores. Talking to, again, a host of foreign banks, because mind you, Indian banks cannot lend, to any company against shares. So therefore, people like Standard Chartered, JP Morgan is also advising Torrent in this acquisition. MUFG, the Japanese bank, Citi, Barclays, the common banks which usually do a lot of these kind of acquisition financing, they're in negotiations with that. So that's broadly the financing architecture with which they are working with at the moment.
Well, whether the financing is feasible, easy, or tough, well, there's no doubt that it adds a fair amount of leverage to the balance sheet. And though it helps them climb the ladder and a badge of being bigger, what else are the Mehtas really looking at getting a piece of, Kiran?
Post the acquisition of Curatio, Torrent gained 2 ranks in the Indian pharma market to become the 6th largest player in the domestic market. Now, if it does acquire Cipla, the acquisition will catapult the company to the number 1 position. That shows the size of their ambition. So, how you kind of can look at them growing and jumping over the numbers in the pharma market. So that is clear that why they want to do it, to, grab on to that opportunity to become the number 1 in the Indian pharma market. So that's the kind of aggressiveness that we see. Now, when you talk about, what will they get after acquiring Cipla, obviously the scale, the leadership in the therapeutic markets that Cipla is in leader. So I will just kind of elaborate on more on this, that what exactly is the complementary aspects between the two companies. So Cipla has a clear lead in respiratory products in India and in many parts of the world, and it's strongly placed in ophthalmology, anti-infectives, and anti-AIDS medication. Now, Torrent Pharma, on the other hand, has strong positioning in case of gastrointestinal, cardiac, and neurology drugs. Now, analysts have estimated a limited or manageable overlap, so to say, between the portfolios of the two companies. So they are very complementary to each other. Wherever Torrent is weak, Cipla is strong, and vice versa. So the overlap is quite minimum. So that really is helpful, because then they can grow in different categories, different therapeutic areas as a combined entity. So the
Right.
combined entity will have a market share of, like suppose Cipla right now has a market share of 5.4%, Torrent market share is around 3%. So this together will exceed Sun Pharma's market share of 8.2%. So they will topple the current leader, that is Sun Pharma.
Interestingly, we're talking about where it's complementary when it comes to the balance sheet. We're talking about complementary when it comes to portfolio. But there's a lot more that goes into an M&A, especially in a company like Cipla, which we've seen so much social media conversations, even the articles that have been written in Economic Times about how Cipla is not merely just another pharma company. Culturally, integrating Cipla into Torrent, do you think just the differences in what you understand of how the functioning is, will that be a challenge?
Yes, of course. Like, as much as the portfolio is complementary, the companies per se and their culture and their, legacy is kind of chalk and cheese. So they are like quite different. And that difference could make it difficult for Torrent Pharma to kind of integrate Cipla in its business culturally. Because just to give you an example, like Cipla is a promoter owned but professionally managed company with an enormous legacy and global standing. Torrent, on the other hand, isn't widely known, so widely known as Cipla in the domestic market or even in the international market. It is promoter owned and driven and managed completely, very promoter driven. The company doesn't even have anyone designated as a CEO, but the 10-member board has 3 Mehtas: Sudhir Mehta, the chairman emeritus, Samir Mehta, the executive chairman, and his son Aman Mehta, who is a whole time director. So you can see, the promoter control is very significant and obvious in case of Torrent Pharma. And in case of Cipla, we see that, the Hamids have always kind of allowed the professional run management to and been there to direct and put the vision out.
And
to
it has
build the
done
vision.
wonders for them. And it's done
Of
wonders for
course.
them as well when Umang Vora took over.
Of course. So it becomes very difficult that a mid-sized pharma company from Gujarat taking over a company which has such a huge body of work. It'll be interesting to see how, how these integrations take place.
Kiran, I recall you once telling me that you get to know more about how a company is run by looking at its filings rather than talking to the families. This is obviously a very quiet family. So, what are you picking up from the differences between how Cipla is run and how Torrent Pharma is run?
They're more probably profit focused compared to Cipla. So when I told you earlier the numbers, despite the top line numbers being huge for Cipla compared to Torrent or being significant compared to Torrent, the EBITDA margin comparison when you look at for both, Torrent is more profitably run. So EBITDA margin for Torrent is standing at 30.5% for the year FY23, and for Cipla that number was 23.6%. So you can see that commercial business driven approach more so in case of Torrent as against Cipla. Of course, with size, obviously the EBITDA margins get rationalized. It's easier to kind of be profitable and agile when you are smaller, and with scale, it could be different, but still get that sense. Even from the annual report, the way they have structured the company, you can see that it's a very tightly run, very efficiently run company. They specifically talk about productivity of the field force and how increasing or keeping the productivity high is important barometer or benchmark for them compared to Cipla, which is more focused on the larger big picture. What are the next patient centric things they are doing? What are the new therapies that they are getting into? What is the next strategy to drive growth? So you can see the difference in the conversations between the two companies when you look at the annual report, what the chairman is talking, the chairman's speech. It's quite different between the two companies. That is very obvious that culturally, this is a typical Indian company driving, keeping the cost low, driving profitability, whereas Cipla is very global in its functions. Just to give you an example, Cipla has 47 manufacturing facilities across the globe. And in comparison, Torrent has 7 manufacturing facilities, out of which 4 are US FDA approved. So you can see the difference in the scale that we are talking about. Half of Torrent's revenues are earned from the domestic market, and the remaining are from Brazil, US, and Germany, and some other few countries more. Well, in case of Cipla, they are present in more than 50 countries. They have a huge body of work in sub-Saharan African regions, anti-AIDS medication providing that they do. It's huge, like the kind of work that they're doing.
Arjit, any sense of the kind of timeline that we're talking about? I know you said they've submitted a non-binding offer at this point, which helps them evaluate what is the balance sheets looking like or their ability to raise that kind of funding. But is there a timeline to this movement as it moves ahead?
Yes, there is. What I picked up from talking to people, currently the diligence is on. So the diligence is going to take around 3 to 4 weeks. So throughout September, they're going to try to finish the diligence bit. Mind you, Cipla is a listed company. You cannot have, from a regulatory point of view, additional information on a listed company which is not available with other minority shareholders. So the modeling bit explored the synergies, the cost synergies, operational synergies, and Kiran talked about it. The plan to, as of now, look at submission of a bid, of a firm bid with tied up financing early October or end September. And they want to ideally make the announcement. This is going to be like their big Diwali announcement, so to speak. Provided, of course, remember one thing. This is both the company. The problem in this particular saga is both are listed companies. Cipla's stock has been on a tear. It would be interesting to see that to what extent or where would Torrent draw the line? Yes, they have the financial flexibility. Yes, they have high promoter holding. But if the Cipla stock keeps rising, it's going to be a stretch. Ever since we wrote the story about their financing, the structure that they're working at, Torrent's market cap has been eroded by around 10,000 odd crores. So the market or the investors are wary of the fact that Torrent is trying to digest something which is double its size. And nobody likes leverage until and unless you are a private equity fund, or you are levering up the target. That's the difference between a private equity and a strategic company like a Torrent buying, because they are buying it for the long haul. They are buying it
Yeah.
for a 25, 30-year, multi-generational approach. And mind you, if they are successful, I do feel that there could be other strategics. Why would people let go of such an opportunity? Literally, picture abhi baki hai. And if there are counter bids, then it's going to get even more interesting. If there's a counter bid, or if there are more than one counter bid from other companies, then to what extent will Torrent bite the bullet is something that's we're going to wait and watch.
Well, will Torrent bite the bullet? It's something that we'll have to wait and watch. But it's not just the flagship firms that have seen the M&A push from the house of Torrent. The group also lists a company called Torrent Investments under it, which was actively scoping for a finance foray. Making a large attempt towards it was the bid for Anil Ambani's Reliance Capital. Sangeeta Mehta, who was tracking those developments closely as they unfolded. Sangeeta, welcome back to the Morning Brief. Torrent was a surprise entrant even there. Take us through what they were looking to pick up, how much they were willing to spend, because we're trying to get into the psyches of, or the mindset of the Mehtas when it comes to acquisitions.
Yes, Anupriya, Torrent was a surprise bidder all along. The acquisition of RCAP would have taken them to a separate league altogether, because overnight they get access to insurance, both life and general. They get access to stockbroking, advisory services, commodities trading, a whole lot of businesses that Reliance had under its bouquet. In fact, the kind of bids which they gave in the first round, initially they had offered just 4,500 crore, and they were not even the highest bidder. Piramal was in fact the highest bidder, and then was Hindujas, and third was Torrent. But at the auction, we were all very surprised that Torrent emerged as the highest bidder. It is partly also because Piramal exited the race. And at that time, it became very clear that Torrent was very ambitious about financial services and that it would not step back.
So let's talk money then, because that's the point where it seems to have fallen out, and financing is a big key point of discussion even in the Cipla potential acquisition. Take us through what they were willing to spend, where were the hurdles, and finally, how did that saga come to a close?
So, in case of Reliance Capital, there were actually 3 rounds of bidding. The first round was a close envelope bid where Torrent, Hindujas, Piramal, and Oaktree gave an offer ranging from 5,000 to 4,000. In the second round, which was kind of a auction where each bidders were asked to give a bid, and there Torrent gave 8,600, which is almost double of what they had offered in the first round. That is 4,500 was their first round bid. This kind of goes to indicate that Torrent was very ambitious of acquiring a financial services business in this process, and they were declared as the highest bidder in the first round itself. What actually went wrong for them, and it was very unfortunate, that the same night Hindujas gave a counter bid of almost 1,000 crore higher than what Hindujas had offered in the first round. And this is despite the fact that the auction round concluded at 5 in the evening, where lenders declared Torrent as the highest bidder. Hinduja was the second highest bidder, offering 8,110 crore. And yet, very same evening, Hindujas came back offering 9,400 crore. And Torrent took an offense to this, obviously, that they protested. They wrote a letter to the RP, they wrote a letter to the lenders saying that this is not done, IBC process is being violated. But then, the gap between the offer that Torrent made and the liquidation value was close to 4,500 crore. And that was a huge gap. They went all the way to Supreme Court to stall lenders from having a second round of auction, but unfortunately they did not get a stay on that. This kind of episode highlights that how ambitious they were for acquiring a financial services business, which is not currently in their bouquet. They're very strong on pharma, but they don't have a financial services business which is growing exponentially in India.
The aggression and ambition is palpable when it comes to Torrent, but pricing and integration will be the stumbling blocks. Undoubtedly, an acquisition like this will catapult Torrent to the top of the leaderboard in India. But at what cost? The last time Torrent overpaid for an acquisition was in 2013 for distressed Elder Pharma's domestic business. The stock market punished it for it. Sun Pharma also languished after the $4 billion all-stock buyout of Ranbaxy. But it may be too soon to start counting the pills, as the doctor has not even written a proper prescription for sale yet. But one thing is for sure, the Mehtas are not slowing down from entering new segments or completely new sectors. In fact, like Kiran was mentioning, the track of the Torrent Group is mirroring the Sun Pharma family, just as tight-lipped but with offshoots in many businesses, but pharma remaining the flagship. Will this dose of M&A prove to be healthy? Well, we'll have to wait and watch for that one. Keep tracking the story for the latest on the Economic Times. With that, it's a wrap on today's episode for this podcast of The Morning Brief. We will be back on Thursday and Friday. A shout out to the team that put this together. Surohini Jain on production and Amrit Regi on sound. Executive producers for the show, Arijit Barman, Anirban Chaudhary, and me, your host, Anupriya Nair. Thank you for listening in. Hit the follow button to be notified when our next episode drops so you don't miss it. From all of us here at TMB, thank you for listening in and have a great day.